And so you want to really wait for the extreme situation before you can really make a bet, so that you have A, enough of a margin of safety, and B, that you can actually stand against the whole market when that do happen. That requires an extreme discipline of, of demanding a large amount of margin of safety. Virtually all the successful value investor practitioners really have all that element in common. They do not bet often, and whenever they bet, they require a large amount of margin of safety, so that they will be comfortable in case the market moves against them. And so that they are seizing the opportunities that almost no-brainer. And that really is the most difficult challenges. Most people really do not really have the necessary discipline, mental discipline to do that. And so you would say that in the bull market, everybody at least would call themselves value investors. They buy something, they think there is a 20% discount to what they think is an intrinsic value. And when it goes up, they really trump themselves as a successful, intelligent, and value investor. But then when the market really against them, which is very easy, 20% discount is almost within the margin of error in the sense. If the market began to, and you would say they will be the first one to respect the market and run. That's typically the case. And so when you see a situation like that, that is usually a sign that it's not true value investing as is properly practiced. So as a young student and a young analyst or somebody who's interested in finance, I would strongly encourage you, the best way to do that is to study the successful practices in real life and examples or history, but studied very well all the examples of the great value investing decisions. I was talking to Asner on the way from the airport to pick me up, so we talked about his favorite stock in Russian oil, which reminds me one of those great examples of value investing back in the early 90s. As some of you might know, in the early 90s, Russia went through a shock therapy and went into free market almost overnight. In a short period of time, they privatized some of the most prized state asset, including local oil and gas property you talk about. And it was so short that most people don't really understand what it's all about. A lot of the people who work in the companies and also ordinary citizens were given certificate about that can really convert it to stock ownership, but most people really don't know what it is. So anybody who come along offer them a real cash, which they recognize, they were just afraid to give it away. So as a result of those certificates, at one point it was trading as an extraordinarily low prices. How low is the prices? Forget about the earnings. Just the sort of the asset on the balance sheet. At the time, the oil prices, I think in the 4 or 5 year average around $20. And the reserve represented by the balance sheet on a per share basis, value of the oil per barrel of the proven reserve at really low prices. Esther, do you remember what was the price? Anybody remember? It was $20 per barrel traded on the open market. Anybody can imagine how low did it go? 1 cent on the dollar. Sometimes half cents on the dollar. In other words, about 10 cents to 20 cents per proven barrel of oil on the balance sheet. And that's not even counting the earnings from the company. This is how low it went. It was ridiculous. Now I thought at that point that that's some kind of a margin of safety. Even consider the political situation in Russia. And it ultimately traded up, for a longer period of time it was at 20, 30 cents, 50 cents, and it gradually moved to $1 and briefly traded to $3. And then a few years later, the Asian financial crisis occurred, and the Russian devalued the currency. So all of a sudden, the $2 will no longer looks very protected because the currency literally at one point it went down 90%. I mean 90. But if you really bought it at the 10 cents, which is a half percent of the value, less than, not the 10%, the value of the currency down 90%, you still came out quite all right. In fact, you still probably made it 10 times your money. That's how an extreme situation can become. That would be a good example to study. So that you can really withstand a situation, external shock, that really shocked one of the measure of value, in this case currency, by 90%, you still came out on top. That is how extreme it is, that concept of margin of safety, when you do practice. Take another example, a few years afterwards, back in 97, 98, the oil on the open market worldwide traded below $10 for a period of several months. At the time, the 5-year average is probably 20, as I said it before, but also the majority, actually if not all of the productions on the West is above $10 cost. ExxonMobil, Shell, BP, you name it, everything outside Saudi Arabia, couple Gulf state countries, and part of Russia. Part of those is small portion. It's not that small, but it's still a fraction of the overall production. Everybody's become unprofitable at $10 per oil. And at the time, we have not really figured out how to replace oil. And so there were plenty companies at the time who's not losing money, even at the 10, and who's really making a great, and who has a huge amount on the balance sheet. And you can calculate as to what it is amount to per share. And so there's really examples after examples after examples. So in every period of time, since I was in business, this is from the mid-90s, 94, 95, so it's nearly 20 years. I've never really go through a period of time that I couldn't really find something just enticing and interesting. So if you especially operate a smaller pool of the money, at any time, because you're really kind of choosing from 100,000 different securities, mostly stocks, all over the world, there are always opportunities like that that give you plenty of margin of safety. But of course, the most interesting thing you want to do is not only you're talking about an asset, you're talking about an enduring, earning, generating franchise, a compounding machine, in other words. If you can combine the cheap prices on the asset, and also the quality of the asset, the ability to consistently generate cash earnings on a compounded growing basis, that is the holy grail that you can really hold for the longest period of time. And no matter what the market really for against you, you can really basically ignore. Now, does a situation like that exist? I would argue it does. Maybe not for the larger amount of capital, but smaller amount of capital. If I were a student today and it has a few tens of thousands of dollars, I'll be really very happy to live in the environment as it is today. Now, if I have a larger amount of money, we have multiple challenges all over the world, which we cannot really go into today. But if you have a smaller pool of money, there are tremendous opportunities like that in all small pockets. I give you an example that you can really do more work to see whether it's interesting. In Korea, there's a form of a securities called a preferred securities. Essentially, it is a non-voting common stock that pays slightly more preferred dividend, not much, but it cannot vote. But for interesting reasons, that they are trading sometime up to 70, 80% discount to their common equivalent. And in that group of securities, there are several companies that really have enduring franchise that have been growing earnings and revenue on a compounded basis for over 3-4 decades. Those franchises nearly as a fortress, fortress-like, great earning power machines, and it still have a lot of opportunity of expansion. And trading at prices that is essentially just tiny fraction of what it really should be worth in an open and a private transaction if you buy the whole company. In fact, you have really a comparison of the common stock in the voting common stock equivalent. And situations just like that really exist even today. There's absolutely no reason, especially some of those companies that I talk about it, the family really controls the voting of the common anyway. So there is virtually no differences between the common, voting common and non-voting common. There was virtually no differences. And yet the trading was at 80% discount. I'm not talking about 20% discount, 80% discount. Trading on the 20 cents on the dollar if you believe that that common value reflects the true value. So the opportunity that my point is really existed on all the different ones. So if you're starting your career, if you're young, if I were you, starting all over again, I would have first studied all the great examples in the past in which market went to the extreme on small segments of securities that give you a tremendous margin of safety. Now, all sorts of things happen, and you will still come out okay. Even if you lose money, you're still in the game. Study that one, and then study what is available today. And at any given time, there are always opportunities like that. And really it has something to do with our fundamental human psychology. As long as human remains the same, which I suspect we will after millions of years, that opportunity exists, which is quite an encouraging sign for young people. So if I were you, I would be very excited today as I was when I was sitting in the audience in your shoe about 20 years ago. So good luck for that. Now I open for questions.
Yeah, I have a question. How do you decide when you sell the stock?
Well, that's a very interesting question. Now, depends what's the source of your value. In some of an example that I stated, the source of the value, it really is the asset value. And in that case, you really want to really reevaluate your scenarios upside and downside every once in a while because the situation changes. For example, in your favorite stock in the Russian oil, the local oils, and Gazprom, I sold it 2 years after I first bought it. And it just but at the time they're still kind of trading probably 90%, 80 to 90% discount. But I think the 80-90% discount is warranted somehow. Today they're still trading at a huge discount. I don't know what it is. You're probably more updated than I do. But relative to all the other countries, I would feel less comfortable with that discount. I need more.